Welcome to the Organized Expat, brought to you by Tytle, the platform for expat taxes.
So, Laurens, we're going to talk about capital gains in Italy. So, first of all, what's a capital gain?
Yeah, capital gain is when you sell an asset for more than what you paid for it. So, if you made a profit on an asset, and that then triggers capital gains taxes.
So that could be a house or stocks or...
Yeah, house, stock, cryptocurrencies, basically, all assets that you can think of.
Yeah.
Even, let's say, expensive art could fall under it.
Okay, yeah, maybe less common, even. But still, that could trigger capital gains tax, or that's what we're going to find out now, because if you have a capital gain, is it taxed in Italy?
So capital gains, it depends of course on which capital gains, but they're taxed in Italy at a flat rate of 26%, and Italian government bonds are taxed at a lower rate, at 12.5%. Yeah. So that means that if you sell cryptocurrencies, etc., they're taxed at a 26% flat rate in general.
And I heard that for cryptocurrency there is the idea within Italian politics at the moment to hike that rate all the way up to 42%.
To 42%, yeah, that's correct. And that's the debate that's currently ongoing. At the moment, it's still, at the moment we're recording this video, it's still 26%, but it can definitely go up in the future, which is also something you see in other countries. Mostly it's aligned with the capital gains tax rate, but you see a shift towards just income tax rates, progressive tax rates, and everything. But at the moment, that's more when it's mining or staking, or when you have some kind of almost business activity for crypto.
And it's also in a way not very smart, because that's at least what I think when I thought when I heard it, because many countries are also trying to attract those people, the young skilled people who often trade crypto. So it would be a strange move if they did it.
Yeah, exactly. And those crypto traders, crypto people most often also bring other things as well to the country, to the economy, sometimes in the startup scene, etc. So you see that Portugal, for example, has been in the past quite aggressive in trying to attract crypto traders.
Yeah. Because it was very favorable with its tax regime with regard to crypto.
In Portugal?
Yeah.
Yeah, no, exactly. And now it's not as favorable, but it's still favorable. Yeah. It's also a bit of a race to the bottom sometimes. Yeah. When there's something like cryptocurrency regulation or taxes. Yeah. Some voices are indeed saying that it would not be smart for Italy to increase taxes on crypto now. Yeah. When they're trying to attract skilled workers from abroad, young people, etc.
So that's probably why there's the pushback, because it's not that smart. So we talked about the rate, which is 26%, can go to 12.5% for treasury bonds, Italian treasury bonds, and Italian investment funds, I heard it can go all the way down to 0.
Yeah, so those are typically exempt. And then same for your house. If your house is your primary residence, then it's also exempt. Or if you have just whatever house, also if it's an investment, and you hold it for more than 5 years. So general rule there is if you hold it for more than 5 years, it's exempt. If you hold it for less than 5 years, it needs to be your primary residence for it to be exempt, and you test that by checking if you live there more than 50% of your time during the period in which you held the property.
Yeah, and a question that might come up is what about dividends? So is that seen as a capital gain or not?
Yeah, so cash dividends are just treated as regular income, so they don't fall under the capital gains taxes.
Okay, it's a different category.
It's a different category.
Yeah, exactly. So that's good to know. If you sell something, then I think that's just the next year when it becomes relevant that you have to report it. So if something happens this year, then next year you're going to report it and you're going to pay tax.
Yeah, that's true.
Yeah. okay. Deductions, I think Italy is probably quite in line with other countries that you can deduct expenses.
So, some expenses, broker commissions, notary fees, maybe some local taxes that were paid in relation to the sale.
Yeah.
So those will be subtracted.
Yeah.
So let's say if it's your selling price minus your acquisition price, that's the capital gain. So those expenses lower your selling price, so then your net gain is a bit lower, and it will also lower your tax burden.
Yeah, I see. And if you want to have a super easy, let's say, treatment, is there also something else that the Italians have in store for us?
Yeah, as in it was possible, at least in the past, to buy off your foreign capital gains for 100k. It's now increased to 200k. But that's about all your foreign capital gains income.
Yeah, and that's an important distinction. So now we talked about foreign or Italian, just capital gains, when you're an Italian tax resident. But this regime, which I think is called the neo-resident regime, that you pay 100,000 or 200,000 right now. It was 100,000, but that's for foreign capital gains.
Exactly, and then you need to determine whether a capital gain is foreign sourced or Italian sourced. That can sometimes be tricky. Yeah, and the easiest example is real estate. Yeah. So if you have real estate abroad, that's a foreign sourced capital gain. Yeah. Whereas if you have Italian assets, something located in Italy, then it's an Italian capital gain. And as an Italian resident, you file your worldwide income. Yeah. So income in Italy and everything you have, every income source from abroad. And those foreign source capital gains can be bought off for 200k. Yeah.
So that's a special regime that you have to apply for. So that's something to keep in mind if you have a lot of income, because this is only interesting because we're talking about taxes. We're not talking about that you have more than 100,000 or 200,000 in assets. It means that you prefer to pay 200,000 euros in taxes than the real amount that you would be due.
Exactly. So it's worth it if your tax bill would have otherwise been if your tax bill was otherwise more than 200k.
Yeah, okay. I think that's very clear. So thanks a lot for this update and the insights, and to the listeners and watchers, viewers, hope to see you next time.
Yeah.
Bye-bye.